Hey everyone, welcome to the Darshan Talks podcast. I'm your host, Darshan Kulkarni. It's my mission to help you trust the products you depend on. As you may know, I'm an attorney, I'm a pharmacist, and I advise companies with FDA regulated products. So if you think about drugs, wonder about devices, or obsess over pharmacy, this is the live stream, this is the podcast for you. I do have to state this is not legal advice, it's not clinical advice. I am an attorney, I'm not your attorney. I'm a pharmacist, I'm not your pharmacist. The advice we're going to talk with, the advisor we're going to talk with is an expert in blockchain and distributed ledger technologies, but he is not your expert. So don't consider that advice as much as educational information. So all of this is just educational. It's for entertainment purposes. I do these podcasts because exactly that. They're a lot of fun. And I find myself learning something new each time. But it would be nice to know if someone's listening. So if you like what you hear, please leave a comment, please subscribe. If you actually like the conversation, please share and feel free to reach out. Please actually ask questions while we're having these conversations. So we love sort of interacting with the questions and sort of sharing them. If you want to find me, you can actually find me on Twitter at Darshan Talks, or just go to our website at darshantalks.com. Today's podcast was actually a request because we've had our guest today more than a few times, and the last time we were finishing up, people were saying that we really want to hear back from him, so we had to bring him back quickly, and we're excited to have him on. And just to introduce him, and he doesn't need any introductions anymore because he is he's a legend. Actually, I believe that's the term we've used for him before. He's a legend. He's the CEO of Acor. But he is actually, and I mean this in all seriousness, he actually is incredibly well known, and he is a person who's in many ways setting up the standards associated with executing DLTs in the life sciences. So our guest for today, the CEO of Acor, Jim Nasr. Hey, Jim, how are you?
Hey, Darshan. Thank you for that introduction. It's always setting me up for failure. So.
It's good to have you on, and the reason we the last time we had this conversation and people were trying to sort of asking these questions is we were talking about NFTs. So when we spoke about NFTs, there were a lot of questions. So let's start from the basics again, just to remind everyone. What is an NFT and how is that different from blockchain, and why should I care in the life sciences?
Sure. So NFT is really a kind of a token, right? It's a non-fungible token, which means that you can't exchange it for another like token. It's unique. It's globally unique. A token really is a unit of essentially measure, but really unit of value for a blockchain, for a public blockchain. Private blockchains don't necessarily need this idea of tokenization, not in this case. Also, tokenization is at the heart of security for what's called a permissionless or a public network. The more tokens you have, the more widely and kind of evenly distributed, the more likely that you're essentially hack proof, right? Because it's very difficult to hack, like tens of thousands of people who have, kind of a little stake or token, in the network. But that's really kind of tokenization.
Jim,
go ahead.
Let me ask you a question. You talk about non-fungible being sort of unique, if you will. Mm-hmm. Is that the equivalent of, say, a MAC address? Because it is unique to an individual device. Yeah. Is that a token?
Yeah. You could look at it that way. Yeah. If essentially a MAC address, if you like, basically represents a specific device, right? Like your laptop, your 13-inch MacBook Pro or whatever it happens to be, and there's only one of them in the world, right? If again, I don't want to, and I'll have to go back to my back in the day of reading about MAC addresses. I don't want to say that's necessarily completely unique, and there's no way of having a duplicate MAC address. That does happen, but then you get a notification. However, certainly with non-fungible tokens, that is exactly the idea, that it represents essentially, it's a token is basically a long hash, it's a long number, but there's no other number like that. And then it could represent anything. It could represent some physical asset. It could represent essentially financial assets. It could represent a digital asset. It could represent a combination of that, all of it. And the reason, going back to your kind of question, is it different to blockchain? Of course not, right? It's a component of blockchain, right? But it's very hot right now, for lack of a better term, because I think people are realizing that you can take non-fungible tokens and you could take all kinds of assets, including newly kind of imagine assets like for instance, LeBron's official dunk at the 2019 World Series, NBA championships, and then basically have an authentic or quote official version of that then is associated to an NFT, and then put that in a marketplace, and then somebody, like you could be a big LeBron fan or a big basketball fan, you say, you know what, I am willing to pay whatever the market rate is, $10,000 for this, and then I am the official owner of it. And then assuming that in like 5 years time, kind of like with baseball trading cards, the value of that dunk goes up since you're the official owner, then you could have an arbitrage opportunity and sell it, say in 5 years, and make like 10 times more the money. And in fact, as you probably have heard, that's already happened. There's been stories about like kids, who bought NFTs and literally not overnight, but over a few weeks, the value of the underlying asset is increased by 5 times or 10 times, and they made a lot of money. That's the basic idea.
But now that raises a few different questions, right? So let me go back to the Mac analogy. And to me, the Mac analogy is you want to keep your Mac address safe because that prevents hackers from accessing it. So you want that to be as private as possible, is how I've always understood it. What I hear you saying, though, is that that uniqueness is what works with an NFT. However, it's going to be public by definition. So if it is public, isn't that a security risk? Like, why is it different in this case?
No, because think of the NFT again. It's a big long number, right?
Yeah, it's
really a reference to something else. Just because you have the big long number, it doesn't mean that you know what it references. You know what I'm saying? Right. Yeah. So, in fact, that's a fundamental component of like how we built, kind of our technologies. For instance, RiceHash, we've talked about it before. It's a technology where we essentially create and manage NFTs and associate them to digital objects such as consent, like a patient consent, or for instance, a patient like result of a patient kind of remote or rapid diagnostics tests, that you capture, from a test kit. That long non-fungible token number doesn't tell you what the actual information is, right? That's a reference to something that's stored somewhere else. It's an encrypted reference. However, what's very important, and this is the part that I think is really interesting, is that through that long, unique number, you can see the trail of transactions. Like for instance, you could see that on August 31st, 2021, somebody with this long token number had a transaction, and let's say the transaction was to record something onto a ledger. We don't know what that is, and then we know that for the same token, like an hour later, there was another transaction, and maybe that transaction was to somebody like you. Let's say you're a doctor. I know, we know you are, but or a pharmacist, actually, even more likely. Sure. You read that information, right? So I created it, but now you read it, and let's say another couple of hours later, a third person, let's say some kind of administrator, approves it. So the trail of the transactions is recorded to that one NFT, but by just looking at the ledger, you can't tell really who did what. Now, if you have the ledger, and access to the private information or the private key to decrypt it, now you could tell the full flow, right? But that's really where the privacy preservation comes in. So, and I think there's a misperception that just because something is on a public ledger, it's not privacy preserving, and that is wrong, right? Because, as they say, there's 1,001 ways to skin a cat. It's not that trivial that just because something is public, everything is public, right? We're able to differentiate between something that's a public auditable event or a traceable thing that is useful, necessary, and really adds value. It adds traceability, it adds accountability, versus kind of like essentially divulging private information, patient information, financial information, or other kinds of information that should not be divulged in that way.
So you talk about this idea of just because it's public doesn't mean it's not private. Talk to me a little bit more about how it can be kept private. Is it the fact that it's a bunch of hashes or a bunch of numbers, and that's the fact that you can't connect it one-to-one is what makes it private? If so, first of all, is that accurate?
Not quite, right? So I think the hashing really is referencing what this token ID looks like. You could also use encryption technology or also hashing technology to encrypt the actual data or encrypt the metadata about the actual data. All that is completely possible. And what you do, right? Again, I'm going to give you a real example. When we're working around this consent idea, right? We have a client, consent custody. We're working with them, their custodian and fiduciary around consent. So, the NFT, the actual token ID is public, right? The transaction ID, which is the transaction that goes on a ledger, that's public. Our signature, like a core signature or their signature, or cryptographic signature, that's public. And some metadata, for instance, metadata that says, okay, this transaction was a consent transaction, that's public. However, nothing else is public. Everything else essentially is encrypted and is stored, off the chain. And if you want to, if you're off the chain, if you're on the private database, obviously you have to, have credentials, you log in, and there's security and normal things like this. But if an auditor comes, or if there is a need for discovery, and somebody says, "Hey, Jim, here's this NFT, and it basically references 5 transactions, all of which are encrypted because we can't really tell what the transaction is. Prove to us what they are." With the right, with the regulator in place, with the right permission, business permission, we're then able to traverse from the ledger to the private database and show, well, here's the actual transactions, right? Or as an example of, using GDPR, if a patient said, "Hey, I want to exercise my right to be forgotten or to be deleted," right? And then prove to me that this happened. We can show that, here's our transaction on our database that says, Darshan's record has been removed or redacted or whatever it is. Here's a corresponding, timestamp, like an immutable timestamp on a public ledger that shows a corresponding transaction. So they basically match. That's the idea.
So here's my basic question I've never understood. Who gives these rights? So the person who sets up the blockchain, that specific blockchain, is the one who controls administrative rights. Is that correct?
No. This is so. Again, there's multiple things, right? The blockchain piece, really, if you're using a public blockchain, there's it's basically code, right? The code allows you to do certain things. So really, it's in terms of like what you're asking, if I understand it correctly, the permissions on who can do what goes where, that's really as part of your application architecture. That's what somebody like me or my team would build, for instance, for a clinical trial patient recruitment application. That's all like private application development. Sure. But then the thing that really connects the public ledger to what's happening privately is when you create, as example, when we create a patient, right? To be able to then take that transaction and have a reference, not everything, obviously, just some reference to that on a public ledger, which says, hey, this application created something. Here's a transaction ID. You just don't know much more about it, right? It allows the transparency and traceability, but it doesn't divulge your privacy.
No, I get that part, but I'm not phrasing that question properly. Is what the problem is. Let me try that again. Let's take exactly the situation you're talking about, which is, let's say we're going to track a patient's consent, right? That's something that your technology, for example, does. Mm-hmm. In this specific instance, we've got the patient. So when the patient comes in, someone's got to assign that individual a patient role. If a different person comes in and they are the physician, they get different rights, and someone's going to assign the physician role. Yeah. And then there's the FDA role. Who makes that decision as to who is what role?
Yeah, that's your traditional kind of like business administrator or your admin or whatever, and those are really based on your business rules. Like for instance, when we're working with consumers, and this consent idea, we have a profile or roles for consumers.
Sure.
Some of whom have slightly more permission and then less, but it's mainly a read role. It's mainly like reading something. Sometimes there's a, as we move on, there will be write capability as well, because they can initiate the consent directly.
Correct.
But typically the write may come to an organization because the consent was really done through a legacy process, like a PDF or a form. And now they're essentially writing that as a bundle or as an individual consent onto our database. So all that really is done by the administrators, if you like.
Which makes sense. And the reason I'm asking that question is, to me, that seems like there's an opportunity for fudging there. And the reason is, if I, for example, if I'm the administrator and I mistakenly assign someone the FDA role,
Sure.
suddenly I can access everything.
Of course.
Yeah,
but that's really, I mean, that's completely true. You have to have other, checks and balances for managing those. Nothing to do with blockchain, right? And they're really largely procedural. This kind of goes back to things like your training and this, around, for instance, HIPAA, much of HIPAA is really about process and documentation. Much of things like high trust and SOX is really about like training and roles and policies. So it's, I think it's naive to think just because I'm technologist and we're talking about this, that it's all about technology. There's so much more to it, right? There's more nuances. I think with good technology, you can impute some trust, some governance, some compliance, but it doesn't do everything. And it can't think for you and kind of come up with the right workflow and processes, right? Because those things, I mean, maybe at some point it could, but certainly not right now. I think right now it's largely about, you need to understand as solution developers and organization what needs to happen, and then call upon the right technologies where they make sense.
Which totally makes sense. The question that comes out of that for me, as we start thinking about it, is there a role, and is this something that is done where you put in those checks and balances? So let's say I assume I give Jim the FDA role by mistake. Is there a so a double check system? Is that something that happens right now, or that's realistically just not done?
Well, look, is it something that happens? I mean, from my experience in healthcare, it happens reactively. It does happen because, again, it's a highly regulated industry, and regulators do check in, and you have to be certified for labs and things like this. But is it done proactively? Is it done using blockchain or other like code-based approaches where you could systematically, kind of make sure that things are done as well as possible? Yeah, the answer is no. I mean, I'll give you a really good example, right? Yeah, it's in the news right now, right? So you probably know that the Elizabeth Holmes, CEO of Theranose, that the trial starts today, right? And that's
could you remind everyone what Theranose is about before you jump into it?
I'm sure most everyone knows, but basically it's this, kind of quote revolutionary Silicon Valley company, that is able to take, just a couple of drops of your blood and basically, through a proprietary system called Edison, kind of is essentially kind of diagnose anything that you may have, like up to 200 tests. Those were the claims. The reality was it was a giant fraud, right? For many, many years, they raised well over $1 billion. The company was worth over 10 billion, right? There were, again, John Carreyrou from Wall Street Journal wrote a book called Bad Blood, which is a very, very good book. Lots of people have talked about this, so I don't need to rehash that. But what I do want to say, though, is this. Look, and we know this because, again, I've read the book and there's a lot of information about this. The regulators, this was a highly secretive organization, which ironically, Holmes was going around saying that they're one of the most transparent healthcare companies, which says a lot about transparency about healthcare, if you believe that, right? And again, you and I have talked about transparency in healthcare, which is generally an oxymoron. So, all to say, the regulators needed to see what's going on, and almost nobody knew that there was a lot of like smoke and mirrors and a lot of shenanigans and a lot of lies, and frankly, a lot of bullying, a lot of, no disrespect to you, a lot of lawyering, like David Boyce on his team, and a lot of intimidation. There was a lot of bad things happening. My point, though, is this: if you had, for instance, imagine if you use blockchain for traceability of data input and results that you received from Theranose, right? If there was a public ledger kind of recording or references of the data capture and results given, this idea of people getting results that were somebody else's, or getting completely erroneous data without any way of tracing back whether or not that really was their blood drop, that would have been significantly lowered, in my opinion, just because there's a public traceability angle. Also, we've talked a lot about NFTs, right? you could imagine, as an example, this whole, again, is completely ludicrous that somehow, quote, the government and or Theranose lost basically years of clinical data results in a database, right? Theranos and Holmes somehow, quote, lost it, in this day and age where everything's backed up 1,000 times over, right? And we all know that. And then also the government basically has a database that's useless because the encryption key, essentially has not been provided and nobody has it. So look, you could use a non-fungible token, with multiple admin keys, where you say, look, 3 out of 5 admin keys must be used to decrypt this. And then you don't have this singular key kind of concept. And that NFT, that non-fungible token, could represent literally the entire database. So all to say that there are ways in which we could apply some of these things we're talking about, even to this kind of scenario where, obviously it's an extreme example, it's kind of a heinous example, but this is more than just fraud. This is more than just the lawyering and all the craziness that they went through. It's really about the impact to patients, right? It's impact to human lives and erroneous information and stress and all kinds of other things, not to kind of belabor this, all kinds of other things that really could and should have been prevented, right? In every way. And if we can essentially shine some layer of traceability, not traceability relying on one organization, traceability relying on a public ledger where journalists and third parties like you and I or whoever, regulators, can actually go and look at the flow of transactions. That would have, I think, helped, right? That would not have been a silver bullet. Don't get me wrong. This is way more nuanced than to trivialize it by saying blockchain would have been the difference, but certainly could have made a difference. And I'll give you another little thing here. And again, this is public knowledge, right? Theranose spent more money on the lawyers when they were operating than the engineers. So that kind of makes me think, where was the priority, right? Was a priority kind of maintaining the narrative and beating down anyone who essentially questioned the narrative versus building a truly powerful engineering team who could actually build this stuff? Anyway, long story short, I think that there's a lot of ways. These are lessons learned for all of us, hopefully, because nobody wants to repeat this kind of thing, right? It's just, it's bad for every one of us in this industry, whether we're technologists or healthcare or some kind of a cross section. But I think this idea of using the technologies we have available to us that provide some kind of public traceability, some kind of public accountability, some kind of layer of trust, really important.
So it's interesting you talk about that, because the part that really jumps out to me is this idea that if we had that level of public traceability, we could have prevented it. So in your experience,
could be, I don't know, I'm not saying
maybe that's unfair. Could have helped is a better.
Could have helped, but at the end of the day, the regulators.
Sure.
This because it's not going to be available for anyone at any time to read it, and it may not even make sense. But the regulators, if they're educated enough, and if they are alert to what could be done, they could have made a difference, right? Because at the end of the day, we're talking about regulators. All these auditability and like kind of logging and traceability, all these things are really kind of tools that at some point the regulators have to tap into in our industry. If you look at Bitcoin, you and I can go and look at every single transaction that's happening on the Bitcoin network of all times, right? You and I can do it, right? Blockchaininfo.com, right? It's very, very simple for us to do it, and we can look at the full transaction. But in this case of healthcare, but again, we've talked a lot about this privacy preservation idea. You and I cannot diagnose we cannot see the full picture. We need the regulators to step in. So this is not a tool necessarily for just anyone in public to be able to tell the full story, but we can certainly improve it.
So, but I guess the point I was actually going after was, do you see, I guess I'm trying to understand what you're seeing in the industry. What I'm seeing in the industry is people first develop their products, then they say, how can we optimize that, and then add the blockchain or this other type of transparency protocols to it. Yeah. What I hear you almost advocating for is the flip side of that, which is build privacy, build traceability into the system in the beginning.
Absolutely. Privacy by design. Look, blockchain and much of security really is infrastructure, right? You've heard me talk about this stuff before, this idea that imagine that you're in your kitchen, right? And and you're looking at options for your sink, and or maybe you're going to your shower and you're looking at different shower heads and whatever. Underneath the tiles, right, the pipes that are going around your house, that's infrastructure, right? You're going to build, like you're going to have this sink built on top of your piping for your kitchen, right? That's really blockchain. It's infrastructure. So if you think about this, kind of privacy by design, a trust layer by design is already baked in. This should not be an afterthought, right? We're at that stage where you can do it, especially now, you can do it in a way where it's actually economical. You can do it in where it's not intrusive. It doesn't change or it has very low impact on user experience. And so that's exactly what I'm advocating. If this is an afterthought or some kind of a gimmick, you miss the point.
But so first of all, Jim, I know you've had some experience with Fuse, but I just thought it might be relevant to our listeners to see that the FDA is looking at exactly that type of approach,
Sure.
which is building in and creating a way to work with technology groups to actually build privacy and build technology into the systems themselves. And
Yeah.
this meeting is going to be on September 13th to the 15th, 2021. So for those of you who are interested, feel free to jump in. But I guess the question I'm asking, Jim, is that I'm now thinking about myself. Let's say I have a new idea for a new product. It's going to be the next great medical device, a la Theranose. What I hear you saying is you need to build privacy by design. You need to build sort of traceability by design. But if I'm trying to raise the money to do it, I'm going to have a much harder time convincing people to give me the money to build privacy when I haven't even proven that my technology itself works. So what is the magic moment?
Will you go?
You think?
Well, I mean, I don't know if you will, because I think that's
Okay.
that is a hypothesis that we're going to have to think through, right? That's I don't know if that's necessarily the case. I think especially now, I think what you can do though, and again, I hear what you're saying, because you're saying, hey, look, that really wasn't the case before. So all these people raised billions of dollars from VCs. They didn't talk about privacy by design. They didn't go out there and talk about a trust layer and things like this. However, the narrative is changing, right? And I think that there's plenty of evidence around this. There's this whole idea of data dignity. I think we've spoken about that. This idea that people don't want to be Facebook or Google or Amazon's product, right? Because that's exactly where we're at. And the fact that 4 companies basically essentially rule the internet, what was supposed to be always a decentralized platform, I think all those things are part of it. But really, I think this is how you go about shaping your pitch. Is you are a conscious and proactive startup, and you're thinking about this because it's relevant.
So I'm going to ask a question because I think it's going to tie into another concept. We've been talking about privacy. We've been talking about identification using technologies like blockchain. How does this work? And then you just mentioned the 4 companies that sort of control the internet. One of the things that's come up over and over again recently has been this idea of a metaverse. And Facebook is saying that we want to control it. Google's talked about it as well. I don't fully understand the concept. Have you seen this thing before, or do you know what I'm referring to?
I've seen it. I haven't looked into it in enough detail to really have a firm opinion, to be honest.
Well, fair enough. No, and honesty is great. What I was trying to figure out is, and I don't fully understand what the concept is, but I imagine what it is basically something similar to you'll basically be in different formats at the same time. What I've been trying to figure out is if that is the metaverse, if you will, for lack of a better term, will you be able to track your identity across all of them? Would you need multiple identities? And does that have an impact on the blockchain?
Yeah, I mean, it kind of raises a lot of, this is why, and again, I kind of know about this, but it raises a lot of questions in my mind that I don't have great answers for. For instance, there's all kinds of ethical questions that come to mind, right? Which is to say, if you have one identity across the physical world and metaverse and the virtual space and all this, does that, how does that protect your rights? How does that protect your privacy? Does it impact it? Does it even make sense? I think all these things are things that I'm not sure. I certainly haven't thought about it in huge detail. But then beyond that, then there's this idea of okay, look, and we talked last time, I think, about identity. If we had, and we don't right now, we're nowhere near it. If we had this idea of a decentralized identifier, so-called DID, we're using a blockchain technology. There's only one unique identifier for me as an individual, right? And then it's got all of my various attributes and things that I do or whatever. As I choose to reveal it, as I choose to manifest it, it's available. That might work because then you essentially, you on your phone or whatever, have a way of controlling, at least knowing that your identity is singular and unique, but also is being referenced in these places. But right now we don't have that. Right now, I am one persona and personality and ID on Google. I'm a whole different one on Facebook, and so on and so forth. They're not the same. Never mind in healthcare, where all of us have 7 or 8 or 15 different, profiles and kind of data associated to us. So I think, to me, honestly, the thing that comes to me the most is this idea of the ethical lines around this. And I think this is one that really requires some thinking.
So it's interesting you talk about the ethical lines, and I think that's really the big question, right? To me, the biggest ethical question is, should Facebook or LinkedIn or Microsoft or whoever you want to use have the ability to know who I am across these different platforms? On the other hand, who should the government know that? For example, as we know, China does monitor people across the internet.
And I think the answer, Darshan,
yeah,
not to interrupt you, I think the answer is, my thought is no, they shouldn't. They're independent organizations who are profit-oriented, have their own agendas, even if it's a government. Yeah. They shouldn't. Yeah. If you singularly, this is the idea of the decentralized identifier, if you had your verified credentials and you had an ID that you controlled as an individual, and then this is where the whole idea of the consent and the blockchain comes in. You provided consent for certain organizations to maybe use your information or your ID in different contexts or go across different applications because it made sense to you. Then, yeah, sure, because you as an individual are empowering all that to happen, as opposed to somebody else making decisions on your behalf, or frankly, all of it happening without any of your knowledge, which is exactly what's happening now. Right, there are a number of companies right now that are worth in the billions of dollars. None of us know about. This is not the Googles of the world.
Yeah,
none of us know about them, but they have massive profiles about every one of us, and they make huge amounts of money because of it.
Like Palantir.
There's a few. I don't want to name any names.
No, don't name them. I don't have to worry about it. But
but that's the reality. We know it's there.
Yeah,
we have come across it, and I think that is wrong, right? They have disproportional power, over individuals, and individuals really have very little say or knowledge. 2, man, this can get extremely unethical. Extremely unethical, and even if it's just inadvertent, right? Hacking happens and things like this. Even if it's purely accidental, it's a huge exposure.
So it really raises that next question to me, which is this concept I actually discussed yesterday with another guest I had. So if people are listening in, I had Shula on yesterday, and Shula and I were talking about blockchain as well. And one of the things we were talking about is under GDPR and under CCPA, et cetera, you have the quote unquote right to be forgotten, and which is great. Sounds like a great idea, but it is a opt-in right in that you have to ask to be forgotten, as opposed to an opt-out right, which is you're automatically forgotten after a certain amount of time. GDPR, I believe, has some opportunities for that. Do you think that as we move towards a more privacy by design structure, using technologies like blockchain, we will land up with a opt-out design for privacy where people will be forgotten after 30 days and you have to reestablish and renew an identity, if you will, and the advantage of that is it's helpful. Go ahead.
So I think, again, unfortunately, this goes back to regulators, right? Because somebody's going to come up with these standards, somebody's going to have to come up with policies and laws and then enforce it, right? And my big worry, and again, I work with the government and in various shapes and form. My big worry is are the regulators aware enough? And there's a number of issues. That there's inertia, that there's lack of real knowledge, there's all kinds of things. But are they really aware enough to kind of do this? Because the alternative is a whole lot easier, right? That's the first thing. The other thing, though, I think is all to do with where do incentives line up, right? Because if you look at somebody like Google, right, or all these big organizations, the incentive, right, is not to nudge you to be more compliant, right? or more aware or more individual rights oriented. The incentive is for you to do what is best for them. So, and again, we have the same issue in healthcare, right? One of the biggest issues, if not the biggest one, is misaligned incentives across the different stakeholders, right? No big stakeholder, in healthcare is aligned to collaborate with another big stakeholder. We know that, right? So I think that these are the kind of the rubber hits the ground, problems, because is Google really ever going to nudge us to kind of not opt in? I don't think so, right? Yeah, unless somebody comes and says, hey, thou shalt not do this, they won't voluntarily do it.
It's interesting you talk about that. I think that regulators are going to have a much bigger role to play if they choose to take it. The question is, do they have the knowledge base to do that? And we can have a whole discussion about that next time, because we are, my friend, I know that I aim 15 to 20 minutes conversations. We're at 37 minutes so far. So you're, as always, just a super fun conversationalist. So thank you for coming on. I'm going to ask you 4 questions. So so the first question, what's something you want to ask the audience based on what we discussed?
I really want to see if anybody else in the audience is as, kind of fired up. Fired up maybe is the wrong term, but just worried about what's going on with, with Theranose. It's in the news, but worried in the context of, is it just going to be another big lawyering exercise? Because a lot of money is involved, and it'll just be shoveled under the carpet, because that's what I'm worried about, right? End of the day, this trial will go to mid-December, and a year and a half later, right? What we hear is, hey, Elizabeth Holmes got off with a, little kind of tap on the back, a little, hey, you shouldn't have done this, but life is okay, type of thing. Because I think what that's going to do is send a message out there that you can literally do whatever you want to do, and there's no repercussion at the highest scale. So that's what's on my mind.
That's a really interesting question. So I'm gonna, as you know, I try to answer the question, giving you one opinion and going from there. I think that I have Theranose fatigue at this point, in that for the last 5 years we've seen this. I probably would have cared a lot more probably about 5 years ago. There's a aspect of me as a lawyer that wants justice done. The question is, what is justice? And I think on one hand, I think she definitely needs to be held responsible for fraud to the extent that was perpetrated. But I'm less worried that she won't be held responsible for that, because there are some very, very strong powers that be that are going to hold her responsible. Everything from the DOJ to a multi-billion-dollar venture capitalist and the like, who are going to say, you took my money and you committed fraud. So I'm less worried about that. The question is, what is the bigger worry? Is there the argument that she should be criminally charged, in which case I don't know the charges, but I expect that criminal charges are in there anyways. Yeah, so to me, the lawyering exercise, as you put it, is probably a good thing. Like I want my lawyer to fight for me, and yeah, I don't really have a problem with that. But I see you say, from your perspective, I think you think that she's going to try to weasel out, and I don't think she can. There's not much.
Well, I mean, this is where I'm, that's why I'm asking the question, because I think she raised this Bengali defense, right? That, she was for 15 years, she was under influence of some, some older gentleman that she was having an affair with, and nothing that she said or did none of those, 20 or 50, Fortune and Forbes covers were her own doing. I mean, that just to me is such garbage. Yeah, and again, I think if people are able to get away with that, what that says is like this culture, will propagate itself. Again, we saw it with Ariat, right? And the rapid, the COVID rapid test results, and the company making up tens of thousands of results. Thankfully, the regulators, caught that. But I think this idea that you can basically, especially in healthcare, kind of more or less charlatan your way through these things. It's really alarming.
I can respect that. And I can see the concern that you have, but I think I'm going to hold my judgment until I see. I think that people are throwing things at the wall, but I don't know how likely it is that it'll stick. I think the next question, as you know, that I'm going to ask is, what is something you've learned in the last month that you think the audience might find interesting?
Yeah, we talked a lot about NFTs over the last couple of conversations. I think what I've learned, is actually that, and I mentioned it briefly in our conversation, that it's actually quite possible to have a pretty sophisticated way where you can essentially democratize how an NFT could be, essentially decrypted or how the data from it, not the actual token, obviously. And you could, if you do it and you do it correctly, it could be done in a way where, even like going back to Theranose, you could have the FDA as an example, as a regulator. You could have the the defendants and the prosecutors. You could have the companies. You could have a collection of them be able to essentially be represented, and then like some majority of them would have to be involved. And of course that requires some kind of a process to be able to then, like let's say decrypt the data as example in this case. So I think that's interesting. I think that's there's quite a bit of sophistication around this, and that's one of the things that we've just discovered. And I think that's good because that just gives you more options.
So one of the things I wanted to ask you about, though, and we didn't get a chance to get into this, and this is to me a conversation that's going to come up in the next talk that we do, is I'd be curious on your take on this, the hacking of cryptocurrency, because I've always sort of thought that the entire point of Bitcoin and the entire point of blockchain was it's relatively unhackable.
Well, they're very different things, though, right? So the Bitcoin network has never been hacked, but this idea of cryptocurrency heists, this is so easy. Actually, I would venture to say way more than 600 million has been lost just because people forgot their private key, or they forgot where they store, their 12-word, kind of recovery phrase, right? Or the hard drive where the Bitcoin was stored was lost. I think that's, so I think blockchain and the Bitcoin network, they're really separate from this cryptocurrency heist, because that really has been happening at the wallet or the exchange level, not at the network level. If that makes sense. Are you still there?
Yeah. Sorry. Okay. I hear you, but when you look at this, it says the amount of money you have hacked is one of the biggest in DeFi history. So to me, it's not a loss of password kind of situation. This is
this one isn't. No, right. This is where the exchange has been hacked, right? And that's happened a number of times, right? So that the exchange really, again, imagine, and I'm just going to kind of lay this out. So imagine Acor, we build a cryptocurrency exchange. We build our software, we put it on Amazon Secure Cloud or whatever it happens to be. We're doing interactions and transactions from the Bitcoin network, the public blockchain, but our software is where your personal account and profile is stored, and your, kind of, if you like, your private, your public the public key that goes with your private key, that's where that's stored, and that's where the cryptocurrency is being managed. That's really what we're talking about. It's that scenario being hacked. And you can see the exchange is being hacked.
So it's not. So what you're saying is it's not the actual chain itself.
It's not. No, it's not Bitcoin itself. It's really the software that a third party developer like us, as example, or any other third-party developer built that leverages the Bitcoin network.
Good to know. And thank you for that clarification, because that's a pretty important clarification.
Yeah.
The third question I have for you, as you know, is what's something that's made you happy in the last week?
Gosh, I think this conversation, it was really quite thought-provoking, as always. And I do want to go back. I was just thinking about the last question, Darshan. I think it would be remiss if I didn't explain one little additional thing. So like if you have an exchange, it's a whole lot more convenient, if you like, to retain your cryptocurrency on the exchange. You go in there and kind of like if you use, I don't know, Charles Schwab or TD Ameritrade or whatever. But you do have, because it's decentralized, you do have the ability to essentially take your money, your cryptocurrency, and put it, on your own wallet, or just like, essentially transfer it to yourself, which means now that you are solely responsible for your cryptocurrency, right? That exchange doesn't have your cryptocurrency. They have your account, but the actual money, quote money, that's not there. Now, most people don't do that, right? Most people, they leave their cryptocurrency on the exchange. It's easier in terms of trading. You don't pay fees to transfer it back and forth. But now you're susceptible to an exchange being hacked and then losing your money, right? Because if you took your money and you basically put it, the number essentially that you transfer and put on a QR code on a piece of paper on your own wallet or wrote it down somewhere, now you're solely responsible for it. So if somebody hacked that exchange, they wouldn't steal your money. They steal somebody else's, but not yours.
Which again speaks to the maturity of these sort of systems. In that, I've never worried about whether TD Ameritrade or E-Trade is going to get hacked. Like, I expect that they'll manage it, and they have systems in place for that. But
yes, and also they're FDIC insured. Right, so
yeah. Well, I don't think trade systems are FDIC insured.
No, maybe they're not, but certainly banks are, right?
Yeah, banks are, absolutely.
And if you consider your cryptocurrency exchange as some kind of a holding, you obviously don't have FDIC insurance.
Right. And as you know, the going back to the questions that we do, how can people reach you, Jim? And I've been flashing it all throughout the whole thing, but how can people reach you?
Yeah, just the usual Twitter or LinkedIn.
Perfect. And just to Jim's being modest, but if you have a technology and you think that Jim can help you, you can go to Twitter at @JNasr, or you can go to LinkedIn, and that's still JNasr. And he is very easily reachable. And Jim, it was wonderful as always having you on.
Yeah.
And hopefully we can have you back soon. I know you're very busy.
Thank you.
Thank you.